Monica Gibson with today's Targets in Focus, where we'll be talking projections for pairs Euro-Dollar, US dollar against the Canadian dollar and US dollar Swiss franc. Joining me to discuss these pairs is Derek Frey, Senior Strategist and founder of Carnac Investments. Hi Derek, good to speak to you. Following a relief rally that led the euro-dollar to a high of 127 in the wake of the Greek elections, the euro lost momentum as the market recognised European woes are far from over. What do you see in store for this pair in the short and long term?
Short-term euro is probably going to continue to catch some of the risk-on trade as it seems to be. We've seen the euro appreciate even in the face of the pending election, and now on the backside of it, continue to do so. It gapped higher right away on Sunday when it opened through after the election. So the bias still seems to be short-term strength, but it seems like the strength of that rally seems to be waning, and I really would look to be starting to position short if we cross back up through 127, 127.50 up in that handle. Ultimately, I think we're going to meet some pretty strong headwinds and resistance for at least the better part of the next week or two. So for short term, I'd be selling any additional strength. Longer term, however, as more and more of the unknown situation about the piggies becomes known, even if it's bad news, we go from unknown to known, and that usually leads to, strengthening in a market, even if it is, like I said, bad news. It's better than no news. So I think we're going to see that kind of lend itself to further strengthening in the euro as we continue throughout the summer. But like I said, short term, I think we've seen this rally probably run most of its course.
The loonie dollar has been under assault since the start of the Asian session on Monday, and the afternoon of the European session proved to be no exception. Its rapid decline against the greenback has been fuelled by Spanish debt woes and rumour. Do you see these trends being prolonged for this pair?
The loonie, the Canadian, has been stuck at parity for some time now, and basically it can rally a few hundred points north of it or a few hundred points south of it, but can't seem to break free of it. For the bulk of the summer, I really don't see anything changing that. We're probably stuck in a pretty wide range, largely pretty much between 104 and maybe 97, and expect to see that both sides of the range tested, frankly, before the summer is out. Longer term, 6 to 12 months out, is a little more difficult, of course, to see, but for the most part, it would ultimately see the Canadian dollar appreciating, if anything, against the dollar. So, positioning in that longer-term direction for further appreciation in the Canadian, I think, is the way to go.
And finally, Derek, I understand you have quite a bearish outlook on the US dollar Swiss franc. What are your reasons for this and why?
Well, the Swissy, the main thing, for me at least, is the risk. We know that the Euro Swiss, of course, has been pegged by the SNB. We also know that pegs don't last forever. In fact, that's about the only sure thing we know about pegs, is they almost never last forever. So it's really not a question of if it's going to come out or get pulled or however you want to call it. It's a question of when. I don't necessarily think it's going to be tomorrow or any time in the immediate future, but the probability of that peg coming out is increasing, and therefore the risk is increasing along with it, because the only thing we know for sure is when the peg gets pulled out, we're almost certain to see a huge spike in volatility. Which direction it goes, of course, is anyone's guess, but the Swissy's probably been artificially held down by the bank for some time, so you'd probably see the Swissy appreciating, at least temporarily, on the backside of the peg coming out. But really, it's just, the bottom line is it creates a lot more risk than I'm really willing to put myself or clients in the way of. So Euro and Swissy are often seen as cousins, or trading the mirror image of each other. So the way I look at it, if I have a trade and all things are equal between the Euro and the Swissy right now, I'm going to go with the Euro, even with all the piggy problems, because that peg represents even more risk, in my opinion, right now, as we go through continued instability with the rest of Europe.
Derek, it's been a pleasure. Unfortunately, that's all we have time for today, but click back for an exclusive interview with Rena Harris-Doughty discussing the RBA's monetary meeting minutes. Goodbye.